Well, good morning. Welcome to Property and Paper Live. This is Dawn Rickabaugh with NoteQueen.com, and I will be your hostess this morning for our conversation about real estate, seller financing, and note investing. If you aren't already registered, subscribed, please go subscribe over at NoteQueen.com. You'll be advised of all the little classes and extra things that we're going to be doing here in the next few weeks and months. And if not that, at least please go subscribe to my YouTube channel and podcast. And I do apologize that I sound a little funny. The rabbit brush, I have never had allergies in my whole life, but since moving to Nevada, the rabbit brush gets me for 2 or 3 weeks every year about this time. So I'm not sick, I'm just allergies. As I said in the email, I wanted to bring up, and of course, if you guys have any particular, and I'm going to open the chat so I can keep an eye on it. If you have any particular issues or questions that you want answered, please go ahead and chat them over there or raise your hand. You can raise it by clicking, I forget how. Sometimes they have just a little raise hand right down there, and it's not too hard. But anyway, what I've been hearing, and I'm interested to see, anyway, if you have questions, put them in the chat. Otherwise, I'm going to blah, blah, blah for a little bit on just start us off. I've had at least 2 different agents. One was local here, and one wasn't. Each who have, 20 plus rental properties, and we all know that there's been a lot of changes in the real estate industry with the NAR ruling and all of that, for one thing. And some people don't seem to be much affected by that, but others do. Anyway, they're saying we're rolling out of our rentals. We're seeing what's happening in the market, and in just Carson City area. And mainly, I know about this for 2 reasons. Number one, I follow the price reductions. And there's more properties and more price reductions happening. And then there's a guy that I have helped him. He's done so much work. He always does. He's works with our family, helping us a lot. And so we help him. And we've probably helped him buy 3, 4 properties. And so he's always looking because he wants his kids to have houses and his friends to have houses. And he said, Dawn, there's more and more listings on the market. So anyway, there's no Armageddon scenario yet, but I just kind of wonder, as we get things, why are these realtors that have been in the business for so long, why are they deciding it's time to roll out of these things? A lot of landlords, they're getting squeezed with the property taxes going up, the insurance going up, the insurance dropping them, more tenants, more costly for maintenance and repairs, and they're just tired of it. So most landlords are going to do one of 3 things. They're going to, when they're sick of their property, they're going to put it on the market and do a 1031 exchange if they want to defer all of their capital gains. If they're okay with just deferring some of their capital gains, they're doing owner financing. Let's put it this way. If I'm consulting with someone who's doing owner financing, the way I'll put together that deal, because we all can wear different hats, and I suggest we all get good at wearing different hats in real estate. I know many of you already do. But if I'm consulting with someone and I'm going to want to buy that note, or I want them to have a note, worth holding or selling, or where I could come in and buy a front end partial, just a few payments of that note for little to no discount, I would structure that a whole different way than if I was wearing the hat of I want to buy this property. If I'm buying a property with owner financing, I want a whole different set of terms, because in exchange for the seller's price, I need terms that are below market and are favorable for me for a long-term hold or a wrap or something where I can make it cash flow, right? So there's 2 different sides to look at this. If you're looking to buy property with owner financing, it's a whole different conversation. You want just to be extreme, to be ridiculously extreme, you want 0 down, 0% interest, $500 a payment for the next 100 years or 500 years. Who cares? You're wanting the best terms that makes you, and maybe I'll pay twice as much as the property is worth. Maybe I'll pay 3 times as much as the property is worth if I could get those terms, because what matters is the cash flow in that certain situation. But if you're the seller, right? If you're the seller and you're carrying paper, you got to be very careful the way you do it. And now more than ever, it's not like it's ominous, but you can't be sloppy. Like you used to get away with being sloppy in years prior to, Dodd-Frank and things like that. A lot of sellers are doing that because why? They can sell their property for top dollar, quick, easy sale. Number 2, they defer most of their capital gains, not all. In some of my best ones, I had to put down a down payment. I've never yet got 0%, but I guess because I never asked. For one thing, they get great income for retirement. So, the reason they you're in the landlord business for rental income, right? What these people want is retirement income. And it'd be nice if it was secured by something they're familiar with, because you can take that money, write the check, the IRS their big check, and go throw it in the stock market. Okay, that's fine. But what happens if the stock market crashes? Okay, we always know that the houses we already know, unless we hate that house and it's been nothing but trouble since the beginning, at least we understand the asset. And if something goes sideways, we know how to come in and take it over and manage it. Or they're selling for cash, right? They don't care about earning interest on the IRS's money. They stick it in the bank in maybe as much as a 4.5%, 5%. I don't know what T-bills are paying right now. Sometimes even less. They're just happy to see it sitting there. But then they're still losing money though, right? Because with inflation, if a landlord sells for cash, they don't have a really, really good thing to do with their money, and they write the IRS a big fat check, and then they stick it in the bank. What they're doing is paying the IRS a big chunk of their equity that they could have had working for them, and then they're sticking it in the bank, and I'm guaranteeing you that whatever you're making on the bank account is not keeping up with inflation. What have we seen in the last, I don't even know when it started, but all of a sudden we can see that gold and silver are up significantly, like 30% since I positioned at least. And so it's not that those things are worth more, it's just that the dollar is worth less and buying less. We have, basically lots of big meetings happening later this month, right? The BRICS nations. They're planning to roll out a competition to the SWIFT system so that they can trade amongst themselves institutionally without using the dollar. So I'm not saying the dollar's going away, but there are consistent bites and hits against the dollar. And then now that we're going to turn on the printing presses, probably, I don't know. I don't follow a lot of politics, but just if we have to bail out, all the damage pray to God that the government, if they're going to print money, keep some of it in the U.S. to help U.S. citizens. But if nothing else, they might be, getting it going to send over to Israel or other places like that. As soon as they turn up the printing presses, and if more dollars come back because foreign countries don't need our dollars to transact anymore, dollars come flooding back here, we're printing more to send abroad and hopefully to help some of our own citizens. So that money that you have sitting in the bank, there's a point to keeping some cash reserves, because when a good deal comes along, cash is king. But really, you got to know that you're losing. You might as well have it in a self-directed IRA where they're charging you $100 a month to keep your money in there, because that's what's happening. You're losing money every day that your money's just sitting there. It's a tough situation. Do you guys have any comments so far? What are you guys seeing in your markets? How are you seeing inventory rise? I don't see buyers coming to the table in volume just because the rates went down a little bit. I don't see that. What are you guys seeing out there? Sue Ellen says in coastal North Carolina, major influx of northerner retirees with big cash descending, but want new builds for the most part. Yeah, interesting. In some areas, that's right. I mean, here where I live, there's in the Reno Tahoe area and in other, these other smaller areas where I live, Carson City, there's just still a lot of California money coming in. They can sell for $2 million in California and still come in and buy 3 houses for the same price. So an example that I had, I was in this last week. I'll just keep rambling here for a little bit. One guy was trying to buy the other guy's property. He was a wholesaler, and I've been rubbing shoulders with some wholesalers because there's a lot to be done. They are increasingly in wholesaling. They're increasingly learning to ask for owner financing, and sometimes they're getting really, really great financing deals, 0 down. I want to be at that point of note creation and say, hey, whether you're going to keep this deal or you're going to wholesale it, you've got a note there that the seller traded their property, gave you a note. Did you know that you can wholesale that note too? Why not make 2 wholesale fees instead of 1? And also, if the buyer or the seller, if the seller, let's say, no, I got to have 40 grand. I got to have 40 grand to pay off this medical bill or buy my son a car or something like that. But the wholesaler only wants to put down 0, 5, or 10,000. What I can do is come in and reverse engineer the transaction to make the deal work for everyone, right? So the buyer gets the terms that works for them, the seller gets their price, and also walks away with cash at closing. Okay, so those are the 2 reasons I'm really interested in getting at that point of note creation, whether it's from the seller side or from the buyer side. So I guess being in the note business, for some reason, the seller financing where it's created is the most fascinating place for me because that's where I can use my little tricks, all the tricks up my sleeve, and figure out a way to make every transaction work for both buyer and seller. So anyway, this guy said, Don, can you get on the phone? And this guy, he's willing to offer owner financing, but I don't know how to talk to him about it. These guys are normally just barely getting their heads around owner financing. The whole note conversation is really way down the rabbit hole for them. $1.5 million property in Oahu, Hawaii. They're sick of it. They're not cash flowing. They're renting it for $5,300 a month, and it's not cash flowing and they only have like $160,000 bank loan, but it was a really short amortization. So basically, if there's no maintenance for that month, they keep $200 a month. They were thinking about doing owner financing, but then it got to the point where in the negotiations, the seller ended up changing their price point to a couple $100,000 higher. So the deal didn't really work, but this seller's viewpoint, and I want to know if you guys believe this or you've seen this, he says, oh, I don't care. I'll just take money out of my, I don't know, you had a retirement account or something. I'll pay off that $160,000 so that we can cash flow this rental. And then next year I'll probably be able to sell this property for $2.5 million. That's what he's thinking. He's like, it's a sure bet. Real estate doesn't go down. It's only going to go up. He was like so sure of that. There wasn't even a what if. Right? Just a what if. Are you guys thinking that? Are you guys thinking prices will just go up and up and up no matter what? I know in certain areas of the country, real estate's gonna go down. We don't know what's gonna happen, right? There can be very localized things. We have longshoremen striking, right? Because their $150,000 paychecks are on the line because robotics and automation is quickly replacing them. So in some of these areas where you have a bunch of people that are used to making a bunch of money and then all of a sudden they're not going to be making a bunch of money, they're going to be displaced. I don't know, that we can avoid that. Okay, Clarissa says not in the next couple years. I think it'll go slower or even flat here in LA. The thing is, we don't know. We really don't know what's going to happen, because even if rates go down, if employment is lower, and I don't know if you guys are aware, but every time they come out with numbers for employment, they revise it afterwards and they don't tell the public for a really long time. So at some point we're going to get the real unemployment numbers. And I don't know. I just don't see buyers in most areas going near as crazy as they did during, that 2021 where they're paying it was crazy. 100,000 over asking, and there's multiple offers. I don't see that in my area, even though it's still strong. Are you seeing that, Diane? I know you're here local.
What I understand from realtors in this area is a lot longer days on the market.
Yeah.
And they're starting to see some more aggressive offers. I have a house for sale here in Reno, and just not getting a lot of attention.
And you felt like you priced it appropriately?
Yeah.
And so no offer. How long you been on the market?
Well, I had an offer, and I countered. It's only been on the market for a couple of weeks, but I did have an offer, and I countered, and really not much change other than there was a VA, and I wanted to reserve the right to approve or disapprove whatever they were asking me to do. But the other thing is that I think squelched that deal is it is in a flood zone, so they're going to have to get flood insurance.
Bad timing after what's in the news cycle right now.
Very. Anyway, that's my comment. I understand from realtors that they're on the market longer now.
Yeah, definitely. So anyway, that's good if you're a buyer, I guess, and you can get you have all cash, or especially if you can get owner financing. Now, some of these people don't need to sell. They can rent it if they have to, but some people do need to sell. Okay, so they're going to have to drop their prices or be flexible on terms. And if they do it the right way, they'll maybe come out ahead, right? And there's a very good chance they'll come out ahead if they're flexible on terms. But we have to do it in a way that protects all parties. Even when I buy a property where I didn't put very much down, I'm always very concerned about making sure my borrower never goes without, because usually it's their retirement income and a significant part of their retirement income. So there's no way I'm walking away from anything, right? So, but if I'm a buyer, like I said earlier in the call, I'm asking for a whole different set of terms to benefit me as the buyer, but while still protecting the seller, with sometimes we have character and integrity equity. I mean, the cash equity might be slim, but people want to just deal with people that they feel like they can trust, right? So, but if you're the seller and you really do have to sell, there's ways that you can safely do it, carrying your equity or leaving your loan in place. That's, has to be treated a lot more carefully. Or if you can just rent it out, or you can do, give it to someone else instead of pay a manager to rent property, you can, do a master lease option with somebody who you trust, to, take care of things. And in our area, I guess I am seeing that, you were saying this, Diane, they don't like short-term rentals. In our areas, well, I don't know about if Reno's getting saturated, but mostly those are going pretty strong, gangbusters. I know Tahoe is very saturated, and they're starting to crack down, on how many they allow.
Well, my friend had a rental in Maui for years and years. And she even went and testified because they were putting so many penalties on short-term rentals, which is what she did. So she finally sold it to someone who's going to live there at significantly less price.
She rented it or sold it?
Sold it.
On terms or?
No, she's doing an exchange. She got out of it because the government was trying to penalize all these short-term rental people.
Yeah, we got lots of regulatory nuisance, in my opinion. Zaya says, I'm reading through the chat now here. The numbers are always fake. Yes, they are. They're trying to manage us. I mean, if they actually came out and said, hey, do you know there's quite a few banks on the brink of collapse, but don't worry, don't go run on the bank. I mean, their job is to to keep us feeling, a normalcy bias. I feel underneath just the things that I hear, and also just the things underneath the surface, something else is going on. That's why I so hardcore say prepare in all different ways and diversify in all different ways. If you're too heavy in one sector, de-risk and spread your money out in different ways. If this goes down, this will go up. If this goes down, this will go up. Because we really don't know. Brad says, I have property in Hawaii and the tax values just decreased on my most recent tax bill. They're also talking about restricting foreign property ownership. That's interesting. Brad, are you able to unmute?
Hi, Dawn.
Hey, Brad. Great to see you. Yeah, so what's happening there? So so they've just decreased, so values are technically going down?
Well, that's what my tax statement said.
And is this a second home?
No, it's actually vacant ground on the Big Island.
Oh, gotcha. Vacant land.
But there's a bunch of ridiculous stuff going on over there. They're claiming there's water shortages, which is kind of ridiculous for the amount of rainfall they get.
Right.
And last I heard, in Maui, they are forcing the Airbnb owners to accept local residents into their properties.
At the same price offered to others?
I don't know the answer to that, Dawn. It was an article I saw here in the last month and a half or two, but they're trying to force the Airbnb owners to accept the local residents and stop renting short term.
Oh, I see. No, they're trying to crash. Yeah, and I think that's why Southlake, or is it Southlake, that did that? Because there's no rentals that the workers can afford.
That's what they did to my friend, and they wanted her to get locals at a very low monthly rate. That was just unsustainable and puts all the caretaker people out of work. I mean, it's terrible what they're doing in Maui.
Yeah, so this is the creep of collectivism that we are seeing, where personal property rights, really you can own your property free and clear. And we know this, but you still don't. Try not paying your taxes. Do you think you own that property free and clear? No, you don't. It belongs to, it's real. It's the royal estate. It belongs to the king. It belongs to the monarchy. And we saw, even in COVID, we saw that they could stop you from evicting a tenant. They could stop you from foreclosing on a borrower that was delinquent. Okay, this is, and all these, I'm kind of wondering in my head, all these people who buy institutional paper, and then they have all these rules about, well, you can't foreclose, blah, blah, blah. They're going to have a lot of rules that the government's going to tell them, yeah, you bought this note from us so that we could get our cash out of it. We're going to tell you what you can and can't do with that note. And here's all your rules. I don't know. I know there's pros and cons to having institutionally written documents. Sometimes in the note business, sometimes I buy a note and it's scribbled on badly on half a piece of paper. It's not like it's great sometimes. I think the Airbnb probably had a lot more people paying a lot more money for property because they could cash flow it. And now that, in these areas where they're cracking down on that, it doesn't cash flow, so the property is worth less. And if you are in that situation, it's like if you see the train coming, just get out first, because after, things are slow and then they happen all at once. Prices could go up, right? Or they could stay stable. But a lot of people are thinking, no, next year I'll just hang on, rates will keep coming down, and I'll sell for 10% more next year. But they could also drop 10, 20, 30, 40%. In some areas. So is it more painful that you sold and you missed that 10% up that you thought you could get? And as an aside, you'll get 10% more, but guess what? It'll only buy you, with inflation, it'll only buy you 50% more stuff. So you'll get more money, but you still won't buy that much more stuff because of inflation as time goes on. Or would it be more painful to lose that upside, or more painful to lose the money you already have on the table? So depending on your own financial situation and your net worth, if it goes down and I can't take that $300,000 I have on the table off right now and pay off any loans. You can see where I'm getting here. If you're a little bit dicey and you can't afford to lose the equity you have right now, then sell at least some things in your portfolio and create a little more stability for yourself. Yes, leaving it in the bank, you're losing it all the time. Yes, leaving it in real estate, there's risk. Yes, putting it in the stock market, there's risk. There's all sorts of, things to consider. But to me, I don't go for high in the sky, pie in the sky. What do I have right now? What is my honest to God financial situation, and what makes sense right now? And can I afford to lose $100,000 on this property? If you think you're going to be losing your job or you're retiring and you're barely making it on a rental, the squeeze, and you have some equity that you can take off the table, I don't know. Just makes sense depending on your situation and whether you do that on an installment sale or just sell for cash. It really depends on your own unique situation. Ann says, I'm in Reno too. Yes, longer days on market. Ann, are you a real estate investor or?
I'm a realtor.
Realtor. Okay, great. Can you tell, who are you with, by the way, and how long have you been in the business?
Fathom Realty. I've been a licensed agent since 2021, but I started on the investment side in 2018.
The market's quite different in the last 6 years, just that, huh?
It is. Yep.
Yeah, so are you mainly a listing or selling agent?
I'm 50-50.
Gotcha. So tell me, give me an example of something that's happening, like hey, this guy, blah, 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 here's what we're not getting the offers, we are getting the offers, but they're lowball, or what are you seeing? Give me an example.
So I do have a listing right now, but we actually went into contract before it hit the market.
Oh. A nice little pocket listing.
Yeah, it was friends of theirs anyway that wanted to buy it. But then those buyers had an investment property they wanted to sell, and they had an offer and they were in contract within 2 days. Both those scenarios are definitely opposite of what I just said.
Right, right.
That listings are sitting on the market because one didn't hit and one was in contract in 2 days. But then I have another friend, and the one that had an offer in 2 days, honestly, in my opinion, it was probably $15,000 over the asking. What I would have priced it at, they'd listed with another realtor. So in my mind, it was a little overpriced, but it's in a highly desirable neighborhood. So that whole location, price, condition was in play here, and it's a cash offer. My guess is it might be an Airbnb after the fact, because I know there's a couple Airbnbs on that street, and it's a desirable neighborhood to do that. But then I have another friend whose house, again, I'm not her listing agent, but her, especially in this sense, because her house has been on the market for 6 months. And I don't know why, but her agent wanted to list it more than they did. Usually agents are like, no, you're listing too high. But in this case, because they were going through a divorce, so obviously they probably wanted to go ahead and sell low. But yeah, so the agent listed at her higher price, and it's been on the market for 6 months, and they finally got an offer, and the offer was $50,000 less. And they countered, but that's what happens sometimes, right? You list too high, you have to drop the price, then you get lowball offers.
I think the thing we have to remember is days on market is also contingent upon how smart you are with your price when you first come out on the market. If you get stale, it's not good. If you come out, I would rather come out 5% lower than I think it'll sell and then create a bidding war and just do it fast rather than languish on the market, in and out of escrow. Everyone goes, what's wrong with that property? And you lose it. You lose your advantage. It's counterintuitive to a lot of people. No, I'll just wait and I'll get my price. Like I had a guy, and this was where I had not my note buyer consultant hat on. I was trying to buy this property because he has a ton of free and clear rentals, and a couple of them are vacant. And he says, yeah, well, I'll do the carrying, but he wanted $170,000 more than the property was worth. And he goes, well, I'll just wait till, I'll just wait until someone comes along and just like offers me like, you know, a bunch of money and makes me sell. I don't have to sell it. And I'm like, you know, of course I could pay him 170 more, but then my terms would have to be that much more aggressive. Okay, I'll pay you that, but it's, you know, very low down, very low interest rate, very long term, very low payment, you know, to where I know I can cash flow it, even if the prices drop. In '08 here, even though I wasn't here in '08, I was still in LA, they dropped 50%, prices dropped. But if I have the terms like I just described, I don't care. Because it's still going to rent. People aren't tired of living in houses, right? Even if rent softened up, I can make it cash flow. So, you know, so it's not like you can't pay double or triple what someone wants, but then you have to have just insanely attractive terms. And you know what? Some people do get it. And I'm kind of practicing to be okay with asking for that, you know, because I want to add more to my portfolio if I get terms, right? Especially if I get terms. But it's not the same conversation that a note holder would want, a note buyer would want, right? The terms would make for a different conversation. But sometimes the sellers don't care because all they care is that they get their price. They have bragging rights. I don't know. Yeah, the market was 307. That's all it was worth. And this stupid lady gave me like 470. It's, you know, like, wow, did they get one over on me? You know? But anyway, yeah, really interesting. So if you price reasonably or a little below market, boom, you're probably going to sell, right? In these hotter markets. If you list high, you're going to sit there. And then I'll tell you what, anyone listening, it's better to list low and make people bid for your property than to do multiple price reductions. You start smelling like you're bleeding, like there's blood in the water, right? Okay, that starts smelling of desperation. Okay, you wouldn't buy it for this. Okay, I'm dropping the price. Please come buy it for this. No, you still won't buy it. Oh, I'll drop it some more, you know? So I would say just a word to the wise, even if you're going to offer seller financing, don't be too greedy or weird about it, you know? Still do a good price if you're really serious. If you don't have to sell and it's just like, if someone pays me my price, just for kicks and giggles. But if the money actually matters to you and you need it to tighten up your boat, not, you know, in the chaos that is now unfolding and likely to get a little even more eye-popping, okay? And we don't know what happens to our jobs. We don't know what happens to banking situations, the value of the dollar. Rita says, I agree, we're seeing the same in New York. Prices have been increasing and very low inventory. Okay, so Rita, you actually have low prices and low inventory. That's interesting.
I'm a realtor, actually. During COVID, everyone was leaving the city and moving up here. So people were getting ridiculous prices for their homes.
Right.
1,000 over asking. There was even one that sold 100,000 over asking.
Wow.
That I heard of. Wasn't me, but I heard of that. However, you know, it's not the same rush to buy like it was those last couple of years.
Yeah, even with the rate cuts, right?
Yes, even with the rate cuts, I'm seeing a little more coming on, but the thing is that a lot of sellers refinanced during the COVID. Most of them were doing that because the rates went down. Mm-hmm. So those people really don't want to sell unless they have to or they need to. Mm-hmm. Because on average, if you had a 3-point-something rate, you refinanced at that price at that time, why would you want to sell now to pay close to 7%?
Yeah, that's interesting. So upstate New York. So then if prices do drop there, and then so everybody's pulled all this money out during, you know, they overpaid for their property in upstate New York, and then they refinanced and pulled money out. So now they're probably going to be, if the market goes down, they're going to be underwater. If they can keep it going, it doesn't matter, right? If they couldn't rent for less than their mortgage payment, they're not going anywhere unless they just simply can't pay anymore. Then we're going to see a lot of short sales. What do you think? Does that sound
yes,
right?
I do. starting to see foreclosures, not a lot of them yet, but there have been doing, a lot of people are advertising the foreclosure situation, trying to get agents to join their group.
Yeah, hey, learn how to do short sales. We'll teach you. We're going to make bank here in the next few months. Yeah.
That's what I'm seeing here. I don't know about, and I do get on calls with agents from all over the country. I'm with Keller Williams Realty, so we are a national company and overseas too. In the USA, you're seeing a lot of agents saying the same thing. They're talking that way. Agents from Florida is saying it's longer days on the market. Here in where I am, the average right now is about 46 days, while it was down to like you couldn't even put the house on and it was gone. That's not happening like before. You could still have multiple offers if you price it right, but you are also not overbidding like they were.
Very interesting. A few of those people that there's going to be some unavoidable short sale scenarios, especially if they get too far delinquent. But if someone isn't delinquent yet, and there are buyers that will come in and take over the payment, if you structure that right, that still can work for them to get out of their payment without a short sale. And the buyer is like, oh, I don't care because the payment's low enough that it makes more sense for me to take over your payment than go get my own loan, right? So I'll pay more for the property. I'll take over at an inflated price. So there's still things to do that way. And in that case, though you have to be very careful. And I know Keller Williams is a very it's like 20 years ago when I was just starting in this whole space. Keller Williams was the most open to and talked about owner financing with their clients. Is it still that way? And if so, what are they saying about basically subject to type transactions?
No, they are not. I think it depends on where you are, but because every state have different situations, I cannot speak for others, but I wouldn't say that they're still that way.
You said you wouldn't or would?
Wouldn't say that they are them coming over and taking over the property. I'm not aware of that.
Oh, okay. Well, anyway, in the last, it was in that 2006, 7, 8 when I was trotting around and actually did some presentations at Keller Williams, big offices down in LA area. And they were very open to the owner financing because in their, I forget the name of it, the Gary book, the $1 Million, I don't know. But anyway, realtors that know about different ways to put deals together will really, I think, add an important set of tools to their toolbox and have more ways to help their clients. And it may be a little out of the box, but if you do everything compliant with federal regulations and all of the trusted advisors of a seller or a buyer are brought in to consult. The only piece that all those trusted advisors are missing is they don't understand the secondary note market. And that's why someone who buys notes, a note professional, really is so critical to the conversation. Because like I have said many times, most sellers don't know that there's even a market for a note. They just thought, hey, well, it helped me sell my property. I'm getting this money, but they have no idea that there's a secondary market for notes, that a note can be bought and sold, that someone would go, I want to buy your note. And so, but by the time it's baked in, all the price the note will fetch is already baked in by the time it's done, right? But if we get to it before it's inked, that little midwife point, I'm standing there waiting for the little note baby to be born, not to be too graphic. But, that's when I can have the most impact is reverse engineering the outcome to be best for all parties. The only reason most people figure out that they have a note, that someone wants to buy their note, is when they start getting postcards, 6 to 8 weeks after closing. Hey, we saw that you carried back paper on your property, your last sale. Do you want to sell it? And then they go, oh, is that a thing? So and then by then it can cost them tens or hundreds of thousands of dollars if they haven't done it right. Or if the heirs and beneficiaries, want to sell this note after mom and dad die, then, they can be taking 90 cents on the dollar, or they can be taking 50 cents of the dollar, or 20, or nothing. Some notes are so bad you can't even make a bid on it. Go ahead.
I think that's what was happening because of the 2006 era, where prices were skyrocketing. In 2008, when the market started to crash, and then in 2009 with all the foreclosures, that was the thing, that people were so in on the water that there was nothing that really could be done at that point, even if they wanted to. I don't even know if they're still doing the reassignments of, here in New York, the reassignments of mortgages. Because when they did that Dodd-Frank, I think it was, a lot of rules changed.
Very interesting. Well, thank you for coming on and sharing. It's really valuable to hear firsthand what's happening and what people are seeing. I appreciate that. But yes, in some cases, there's no amount of creative anything is going to fix it. It's just got to price adjust. And to that point, Zaya says in the chat, Michael Pinto and many like him believe that home prices must come down by 40% to get to historical median prices, that price to income's out of whack. Well, that's true in the market too, right? Everything's out of whack. We're in the everything bubble kind of thing. Yeah, unless owners suffer life issues, have immediate needs to sell, they will not discount their homes. And Nahid says prices are coming down even in Texas and California. The short-term are being really hammered by lots of short-term rentals. So regulatory risk when you run a short-term rental. But some people, overpaid for properties, didn't care how big of a loan they had because they were making it cash flow four times a traditional rent. So I think a lot of those short-term people are going to be putting their properties, either they're going to put them out as furnished long-term properties, or they're going to go, wow, I'm underwater on this, I need to sell. So I think if you're a buyer, I would be looking for those Airbnb people who are suffering. They're going to need to get out. But who knows, if prices do come down significantly, the short sales will ramp up, the REOs will ramp up, basically the transfer of wealth up the food chain to Washington and Wall Street. That's how it goes. And then the hedge funds are going to come in and prices will drop just enough to make them more sensible for these hedge funds, but not enough to where the average person can qualify for the loan to buy that same thing. So the hedge funds are going to get ahead of the people. And I know in the wholesale business, they're going, hedge funds are coming around again. Better get ready to sell all our stuff to these hedge funds because they're going to be buying again soon in some of these areas. So just keep swinging back around to be prepared. Sue Ellen says there's a nasty trend where municipalities are going corrupt to grossly raise taxes, grift, which makes resales especially prohibitive, so there's price pressure. But anyway, so they're just basically raising taxes then to drop real estate prices so that their hedge fund buddies get the properties at a discount, or they're going after?
No, they don't care about the properties. They're just trying to grift as much money for themselves on these boards from the tax base. And they are buoyed by the developers. So the developers and the municipality boards are in cahoots to raise the taxes and, let the developers run haywire, and they're running haywire. And the poor people who own property now, it's disgraceful. They can't afford their homes. We have a friend who's a retiree, and he has to go back to work because he'll lose his house. And nobody's buying. The resales in this community, it's a huge community, are on 160 days and nobody's even looking.
Oh, man.
So they're ruining the whole, base.
It's extraordinarily tragic and criminal I can't even turn on the news anymore. I don't watch the news. I can't.
But they're getting away with it. So, they're trying to get boards because a lot of people came from the north down here and they have a lot of cash from their home sales up there, and they didn't really look before they leaped. Mm-hmm. And thank God I started seeing problems and I didn't buy in here, thank God. They wanted to raise 70%.
They must all be in cahoots, including the judges, if they're getting away. The attorneys and judges, they all must be getting paid off. They all must be playing for the same team, because otherwise someone should have had a class action lawsuit going on these things. It's just absolutely crazy.
Yeah, you have to be able to afford a class action suit. And then the people who are the participants get like pennies. So it's
The direction things are
they're putting
going.
a $20 million expansion on town hall when they don't need it. Empty desks. So they want, because they grift it. They get kickbacks from the contractors, and the developers are giving them kickback. It's corrupt.
Wow. Where is this? Where is this?
It's in just south of Wilmington.
Oh, wow. In
Leland.
North Carolina.
Leland. There's other municipalities that I've heard about, so they're trying to do this more often. That's why I put it up to caution everybody, watch the tax base, because if the wrong people get on the boards, you're sunk. There's not much you can do.
Yeah, with
So-
a lot of regulation that is going to happen about taxes, we're just not sure where we're gonna all end up, because two taxes rules are about to expire, one at the end of 25 and the other one at the end of 26.
Which taxes?
So,
Nahid, which type of taxes?
The CARE Act and the Trump Act, that Trump put in. So those, taxes basically, like with the Obama CARE Act that put in 2017, that kept our taxes at 17%. Like right now, we're at the lowest tax bracket ever. And if that expires and they don't do anything about it, we don't know where, we can jump up to 24%.
Yeah.
It's really, really imperative for everyone to kind of like try to preserve their money and keep it in somewhere that they're not going to pay taxes, instead of kicking the can down the road. Oh, I'm not going to pay taxes now. I'm going to put it in this place. And with that, and then I'm going to pay it, later. So you don't know when later your taxes is going to be. And with that, as we see, they keep increasing taxes on real estate, on properties. It's like ridiculous. So, we have to kind of like start taking care of ourselves, because the government is not going to.
Yeah, and
That's
I think
why these seller finance and taking control of these in this sector, like the real estate, it makes it's really important.
Yeah, I think so. And Nahid, I think, didn't you talk to me about the infinite banking insurance product?
Yes.
Yeah, so I'm looking into that. I've been dancing around it for months, especially if crypto goes the way, like, what am I going to do with my crypto gains? I'm not going to let it ride again like I did last time. Rode it all the way up and all the way down. This time I'm going to take profits. Okay, well, where do I want to put it? And I'm very much considering the, that basically infinite banking system. Nahid, if you want to give your information.
I've been a real estate agent since 2000, and I started my real estate career doing short sale foreclosure. And then as you said, no one knew about the second hand market. I got introduced to that in 2016. And what I saw, like in 2022, I got introduced with some really huge people that they have like over $200 million of asset in real estate and stuff like that. And I didn't know about this either. I found out that they are putting their money in what they call a structural asset, which is basically cash value life insurance is one of the structural asset. which by law, by IRS, IRS code, that it will save and preserve your money from taxes. So when you have your money in the life insurance, cash value life insurance, permanent life insurance, the IRS can't touch it. That is not counted as money.
Right. And also you can borrow from yourself.
Yeah, you can borrow from yourself, and that goes against your death benefit, not your actual principal.
Yeah. It's great. You guys look this up. Nahid, if you're on the call and you want to connect with her directly, that's fine. Otherwise, just, Google that. Clarissa is saying, back to our New York, a family member has a property in Midtown Manhattan that got stale in the market and they haven't been able to sell it for a whole year. And another listing just came out in the building at another 100,000 below theirs. Oh man, that's painful, right? So they've been sitting there. Now someone undercut them by 100 grand. Now they're looking foolish, right? Or just, now what are they going to do? Drop 150? That's why I'm saying once they happen slowly, it only takes one person to break and they have to sell below market. Then it's like a race to the bottom. So there's first mover advantage. So don't wait. If you really need to sell, don't be greedy, don't be silly, be smart about it. And if you want to, book some time with me, you can go over and find me on notequeen.com/shop. You can find some books and courses that I have there as well on this. So Rob Garcia said, is Keller Williams open to their agents taking their commission over time? That's a good question for the broker of record. And they should. And Dave Kurtzman's on here, and that's the way how he got a lot of deals done, is being willing to take. He did a ton of business with one particular client just because he was willing to take his commission over time.
Interestingly, Don, when he first walked into the office, that was his first question of me as a prospective agent.
His first question. That's crazy.
Yeah, that's how he did business. He preserved his cash, and as I said before, it was nice getting 10% interest on my commission. Without turning any of it over to the government in advance, and when it paid off, it was a bonus.
Yeah, I know. And like we've all said, you'll need money just as much later as you think you need it right now. Boy, do I love those surprise, things that come in. Rita says, not in my office. Each office is independently owned. Yeah, it just depends on the broker of record, because they have to be willing to take their piece of it too over time, right? And not...
some brokers have been willing to take the broker's share, because the agent usually gets the larger percentage, 60%, 70, 80%, whatever the split.
Gotcha. So the broker will get their little slice and let the agent let theirs ride. That makes sense. And Mazil says, come to Chicago for corruption. It's Crook County, not Cook County. Yeah, Baltimore too, right? Homer, you just got on. We're actually over. But yes, I do record them and they'll be up. So if you go over, and please do follow me. I'm trying to get to 5,000. I don't know why. I have a goal on my YouTube subscribers. So if you sign up there, that's where it will get uploaded in the next week or two. That's a good place to get it. And if you're on podcasts, I'm sure there's different podcasts that host this. I think it gets pushed out to a lot of different podcasts, but it's the Owner Financing and Note Investing podcast. An ending note, a note here at the end that I've been thinking I was going to put in my, there's some little notes that come along that they're not hardly worth doing, but if I feel like it's a really great, turn a little bit of money into a lot bit of money, make a little bit go a long way, like I'll throw it in my, self-directed 401k or HSA account. And I was thinking, I'll put this in my HSA account. And I just sold a piece of land that I owned down in Lucerne Valley, California. I think that's San Bernardino County. And I'd owned it for a super long time. I got it with owner financing, for such great terms, and I just held it, and then I go, I'm just gonna sell it, get out of there. And the amount of paperwork that we had to go through, just the amount of disclosures and back and forth on a teeny little piece of land. I only sold it for 20 grand. It was, undeveloped, raw piece of land out in Stickville. But they said there's so much corruption that, a lot of these, there's a lot of money laundering going on through, certain areas in California, Colorado, a lot of money being laundered, I guess, through and illegal transfers where someone sells a property they don't even own. It was an enormous amount of crazy sort of thing we had to go through. And then I get rid of that. So I'm like, yeah, I'm out of there. And then someone brought me a note secured by, a much bigger piece in Lucerne Valley. But then I'm like, it turns out I talked to the seller, and I finally got the seller interview, because I'm like, it wasn't a big down payment, but the price I got the note at, it was like, well, I'm going to get all of my money back in the next 2.5, maybe 3 years. Maybe it was just worth it, because then I'll double, have a clean double on that in a pretty short period of time. But then after I did the interview so basically what it was $16,000 sale price, only $1,000 down, plus a bunch of closing costs, and then 10% interest, fully amortized. It was short amortization. So it's $15,000 note, and let's say I got it under contract at, in that 6 to 7 range. So I thought, well, maybe it's okay. But anyway, I just go, then he's like, I talked to the owner, the borrower, and he's like, well, I don't think he can't assign that note without you. My attorney has to look at that. And I said, well, not really. And anyway, we get talking. He's a great guy, but he's like, well, we're taking big lawsuits and we're getting rid of these cartels and all these bad actors and these LLCs going on around. So I don't know, are you one of those? And so I'm like, oh boy, this is going to be too much trouble for, I can make money a lot easier than this much risk and trouble. But he's like, well, and then if Kamala gets elected, I'm going to sell everything and move out of the country. And I'm like, so it'll be pretty easy to walk away from this note then. He's only put, 1,000 down. So I'm like, at the end of the day, I'm like, nah, but theoretically, if it would have been a little cleaner, that's something I would have thrown in, just 6,000 or 7,000. It's in my HSA. But then with everything, I don't know, it just got to be too much. Well, then we will wrap it up. I appreciate each and every one of you. And until next time, just go out there and create financial solutions, just one mom and pop to another. See you next time. Bye-bye.